This is Driving Markets. Let's look at the week ahead on Monday, the 23rd of June. Let's see what economic numbers are coming out and how markets will be affected. We will also be discussing, obviously, the geopolitical impact of what's going on in the Middle East with Iran, America, Iran, Israel, and look at the impact on gold and oil and dollar and obviously on bonds. Let's go over some economic numbers that are going to be occurring this week. You've got US existing home sales. Big number. Why is that important? Because homes and people's property is a big part of the economy. It's allowing for hundreds of thousands or millions of dollars to flow on a daily basis. And that adds also to the GDP, but it also reflects the health overall of the consumer. And that's an important measure, because if the consumer feels that his assets, his home, are going up or can easily be sold, then he gets more confidence. On Tuesday, talking about confidence, you've got the Conference Board Consumer Confidence Report out. That's also a big number, measuring overall confidence of the US consumer. Again, stated earlier, or just stated before, that confidence is a big characteristic within financial markets. If the consumer is confident, economies generally move up. Consumer is not confident, economies generally move down. Then also we've got on Thursday GDP US. Wow, that is a massive number, because analysts, traders and economists have been calling for a downward cycle as far as GDP is concerned. GDP, gross domestic product. What does that mean? What is the growth of the actual economy domestically within the home country? Now, the GDP in the US has been inflated over the last few years, mainly due to manipulation by the Biden-Harris administration, including salaries of government employees and all types of other manipulative numbers. But you will see probably a negative number coming out, which is the quarter-on-quarter number, the quarterly number coming out on Thursday, which probably expects to come in at minus 0.2%. Remember, 2 quarters on negative GDP is a recession. So economists and analysts are expecting a negative GDP. Probably the markets will go down. The GDP will also slide down over the next 3 months as well. And then the last quarter and beginning of 2026, you're going to probably see real positive GDP. Remember, GDP is also negative because the Department of Government Efficiency has got rid of a load of jobs, and those salaries are included in the numbers when assessing GDP. Friday, you've got inflation in France expected to tick up slightly, inflation in France, and you've also got US core price inflation in the United States. That is going to be a big number to watch, because that will guide also the Fed as to when interest rates are going to come down and what is the overall management expectation of the present interest rates, and are they going to be enthusiastic or keen to reduce them going forward. You've got personal spending also on Friday, big number personal spending. Why? It's related to confidence. If confidence is high, then personal spending is high, and that also helps overall to boost the economy. And then you've got the University of Michigan Consumer Sentiment Report. Again, another sentiment survey coming out. Big number. You want to see where is the overall sentiment in the economy. Positive, expect the economy to grow. Negative, expect the economy to fall. Where we're going to see gold and oil this week in light of the B-2 stealth bombing of the 3 nuclear reactors or 3 nuclear facilities in Iran. Well, you've got a whole geopolitical volatile situation set up here, where you could have Iran bombing or attacking US assets in the Middle East. They may use their militias, Iran, which is quite common. It's part of their modus operandi to use militias to attack other assets. They often don't attack direct, apart from attacking Israel direct. So they may use militias. Historically, they use Hezbollah, Hamas, and the Houthis. They've also got Kataib al-Hezbollah in Iraq, which is another Iranian militia. They could use that to attack the US air base in Iraq, or bases in Syria where US personnel are stationed. And then you've obviously got Qatar, Bahrain, Saudi Arabia. Will they attack Saudi Arabia? Big question mark, not sure. If they were, then oil would spike even further to around about $90 to $100 a barrel, or even higher at 120. Will Israel attack the oil fields in Iran? Likelihood is yes, they will. Therefore, you could see underlying pressure on oil pushing up. Where's gold going to go? Remember, gold is a go-to safe haven crisis asset. So I could see gold's come off from where the highs of the weekend, 34.10 to 33.50, 33.60. I expect it to trend back up towards 34.10, 34.20. My longer term goal for year end is around about the 3600, 3700 on gold. US dollar, again, DXY, the dollar index has trended down. I think it's going to reverse a little bit up to the level about 101, 102. A bit of dollar strength, especially in light of the crisis, because the dollar is a go-to safe haven when it comes to a crisis or geopolitical event. And then finally, bonds. So bond prices have gone up, yields have come down. Well, that's good for markets, but bonds are again a go-to safe haven. So markets are keep an eye on the Middle East. They want to see, is there going to be an escalation of what's going on there? Will Iran expand its further attacks out of Israel, or stop attacking Israel, or expand in addition to Israel and start attacking other parties in the neighborhood? The Houthis, which are based in Yemen, could strike at the Saudi Arabian oil fields. That is a big question mark at the moment. And obviously, you need to follow this channel. Please be aware that I am Meir Walensky, and if anyone tries to send you a picture or a name saying they are myself, they're probably trying to scam you, so be very careful of that. This is the Driving Markets Report for week commencing 23rd of June. My name is Meir Walensky. Speak to you soon.